Ladies and gentlemen, good day and welcome to Godrej Properties Limited's earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari of CDR India. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us on Godrej Properties Q1 FY23 results conference call. We have with us Mr. Pirojsha Godrej, Executive Chairman, Mr. Mohit Malhotra, Managing Director and CEO, and Mr. Rajendra Khetawat, CFO of the company. We would like to begin the call with opening remarks from the management, following which we'll have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call will be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now request Pirojsha to make his opening remarks.
Good afternoon, everyone. Thank you for joining us for Godrej Properties' first quarter financial year 23 conference call. I'll begin by discussing the highlights of the quarter, and we then look forward to taking your questions and suggestions. I'm happy to report that Godrej Properties started the year with its highest ever first quarter sales. We sold 2,300 homes during the quarter with an area of about 2.8 million square feet, and in value terms sold about 2,520 crore worth of inventory, which represented a year-on-year value growth of 407%. Of course, the base was the Delta wave last year, so it's not really a reasonable base to look at. We were especially pleased to have crossed 1,000 crore of sales in Mumbai through the successful launch of two new projects, Godrej Horizon, wherein we sold more than 500 crore of real estate, and Godrej Ascend in Thane, where we sold 379 homes with a booking value of about 415 crore. We believe this puts us on track to our objective of achieving sales in excess of 10,000 crore in the current financial year. On the operations front, while we had no deliveries in the first quarter, we remain on track to deliver a large number of projects during the rest of the year. As a result of no deliveries in the first quarter, our revenues were relatively muted at 375 crore, a year-on-year growth of 61%. Our adjusted EBITDA grew by 58% to 132 crore, while our net profit grew by 168% to 46 crore. Our residential collections for the quarter stood at 1,538 crore, leading to positive net operating cash flow. From a business development perspective, we recently added a new luxury project near Carmichael Road in Mumbai with a total saleable area of about 1.2 lakh square feet and an expected revenue potential of approximately 1,200 crore. While our new business development announcements during the quarter were only these 2 or 3 projects, one in Carmichael Road, a plotted development project in Nagpur, and an additional phase to one of our projects in Mumbai, we do have a very exciting set of projects under discussion, and our business development pipeline is exceptionally strong. So we expect to have several new projects announcements in the months ahead. While commodity cost inflation has impacted margins on under construction inventory, the price hikes taken to mitigate the same for new projects have been well absorbed. Strong housing demand, despite price increases and interest rate hikes, gives us confidence that the housing cycle upturn is sustainable. We remain confident of leveraging the opportunity to grow our market share aggressively with a sharp focus on business development and project execution, which will set us up for significant earnings growth in the years ahead. I would also like to update you on an important change to our leadership team that will take effect from January 1st, 2023. Mohit, our Managing Director and Chief Executive Officer, has tendered his resignation from the company to seek entrepreneurial opportunities outside Godrej Properties. I'm deeply grateful to Mohit for the essential role he has played in transforming Godrej Properties over the past 12 years he's been with the company and over the past 5.5 years that he's been CEO. I wish Mohit much success for the future and for his new venture. Gaurav Pandey, who is currently the Chief Executive Officer of the North Zone of Godrej Properties, will take over from Mohit as Managing Director and Chief Executive Officer effective January 1st. Gaurav has over 17 years of experience in the real estate sector, and as CEO of our North Zone, he has transformed the P&L of the business and built a high-performing team. In the 5 years of his leadership, the zone grew by 6 times in booking value 4 times in collections, and the imputed return on capital employed increased very significantly to about 27%. In fiscal year 2022, the profit after tax for the North Zone was the largest contributor to Godrej Properties P&L. So I'm quite confident that Gaurav's thorough knowledge of the industry, the company, and his delivery track record will help ensure he has a very successful tenure as CEO of Godrej Properties. On that note, I conclude my remarks. I'd like to thank you all for joining us on the call. We'd now be very happy to discuss any questions, comments, or suggestions you may have.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Kunal Lakhan from CLSA. Please go ahead.
Yeah, hi, good evening. Firstly, on the operating cash flows, it was quite low this quarter. I mean, although it was positive, but as a percentage of collections, it was a bit lower. What is the reason for that?
So Kunal, so obviously, the collections will improve in the coming quarters. Since it's the beginning of the quarter, there are a lot of, construction milestone payments which will keep coming. Since the launches, also 3 launches we have done, those are initial, collection which we have received. But going forward, you will see this collection and the operating cash flow trajectory improving in the coming quarters.
I think, Kunal, we remain very confident both of strong overall collections as well as operating cash flow growth for the full year. We agree this quarter was a little bit low.
Sure. Secondly, on status of your Ashok Vihar launch, if you can give some indication on when the launch will be and where are we in terms of approvals?
Yeah, I think we've been making steady progress on the approval. There are 1 or 2 issues that are still outstanding, so we're hoping for a Q3 launch on that.
Q3, okay. Okay, and lastly, in terms of new launches for the rest of the year, right? I can see only 1 launch in the Mumbai market, which is the Matumba launch. But besides that, we don't have anything else lined up for the rest of the year.
Well, we do have a few projects that, we haven't put in the official guidance that we'd hope to launch by the end of the year, including our Worli development, including perhaps even this Carmichael Road development if we can turn it around fast enough. But you're right that I think some of the Mumbai launches will be second half of next year as well. We have, of course, launched 2 significant projects in Q1. So we expect continued momentum and inventory sales from those projects. Mohit, you want to add anything?
Yeah, as Pirojsha highlighted, I think there are a couple of projects which we are looking to launch, but at our advanced stages of approval, we haven't taken them into our guidance. We also have potential to launch the next phase launch for our Wadala project, which has done phenomenally well. So, looking at quite exciting opportunities in Mumbai this year.
for delivering the P&L. We have a strong, independent business development team. I think for business development, of course, I can personally be involved in some of the important transactions. And I think as we've indicated, I think the Mohit moving on, we've been agreed in a very amicable manner between me and Mohit. I think he's going to do his best to ensure a very smooth transition. We have another 5 or 6 months before Mohit moves on. So I really am quite confident that the business development pipeline won't be affected. And in fact, you will see, I think, a considerable pickup in business development momentum over these next couple of quarters.
Sure. And just if you can elaborate, since the pipeline visibility is very strong. Obviously, we'll take your comments with a pinch of salt since nothing has been firmed up. But what sort of pipeline you are looking at in Mumbai specifically, with regards to SRA redevelopment that you are seeking to sign off with DB earlier. Now, what's the visibility there, and overall in general the pipeline that you are looking at in Mumbai?
Yeah, I think, we have good visibility in Mumbai on again, it's very hard to comment on this till these deals are public and we can speak about them freely. But there are several different projects that we're looking at, including individual projects that have a 5,000 crore kind of booking value addition to the company. So we're quite hopeful of closing a few of these. Nothing specific on the slum redevelopment side, as we mentioned, we had dropped that earlier proposal, but we're seeing several interesting opportunities for new projects, both in Mumbai and Bangalore, in addition, of course, to the good business development that's in any case been going on in NCR and Pune.
Sure, thanks. That's helpful. All the best.
Thank you.
Thank you. We have the next question from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you so much, and best wishes to you, Mohit, for future. My first question is on the price increase, Pirojsha. What's been the sequential increase Q4 to Q1?
Mohit, you want to take that?
Sure. Thanks, Sameer, first for your good wishes. So we had, as we mentioned in the last call, we took a almost 5 to 6% price hike in Q4 to hedge for the inflation. This quarter again, we have taken a price hike of 3 to 4% across projects. Now, some projects we have been able to take a higher number. Some projects we couldn't take as much as we would have liked. But on an average, quarter on quarter, we have been targeting 4 to 5% price hike across markets. Markets like NCR, where prices are already going up significantly, we could take a higher number. In some markets which are still lagging behind, the number of price hikes is slightly lower.
And sir, what's the outlook for balance 9 months of this year?
Yeah, I think we have been, we have not seen any major, drop in demand through these price hikes. So we would like to, continuously push in a prudent way the price hikes. But of course, we'll also have to be very careful about, how consumers are responding to it, and we don't want volumes to drop. So we'll just take it in a very calibrated way and, accordingly decide. Very difficult to give a guidance on this. Okay, no, that's fine. And anything you can talk about the 2 new project acquisitions, which is Carmichael and the plotted development in Nagpur. What kind of gross margins, can we assume, which is backing out both land costs and construction costs? See, Nagpur is a plotted development, so the margins in plotted developments are upwards of 40% plus. So that is. Rajendra, do you have exact margin for Carmichael? I'm sorry.
So Carmichael, we should be, Sameer, we've invested close to, 300 crores. So that is the equivalent amount of profit which we are looking at over there.
Okay, no, that's great, Rajendra. But when you say invested 300, that is only land or land plus construction, you're saying?
Only land. I'm saying on the land, we generally we look to make 2x kind of a return. So that is the margin we look to make from that kind of a project.
Okay. I mean, just so that we are clear, so the sales potential is 1,200 crores and profit is 300, you are saying?
Yeah, basically, I'm just saying that is a ballpark because there will be a lot of, construction, there will be a lot of approval and other stuff, So I'm just saying this is a ballpark.
Okay.
Yeah, these are both obviously quite high margin projects. I think the Carmichael one is a ultra luxury project. The ultimate margin will of course depend on pricing, but it's a small project, so I think we will go for pretty high margins there.
Okay. And the final question is, how does the site at Worli look like in terms of how clear it is?
What?
See, the site is getting cleared. The work had already started, and both the partners are already in the process of site vacation. But if you really ask, I don't think you will see a very major change unless a significant number of people move out. So right now the progress is positive, but a real shift in site, you would see in next 6 months.
Okay. Okay, that's fine. Yeah. Thank you so much.
Thank you. We have the next question from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Yeah, first of all, I'd like to congratulate Mohit for journey. So my question is to Pirojsha. So last year, Northern market contributed about 40% to our pre-sales. And Gaurav now assuming the role of the CEO. So are we looking to replace him in North with someone else? How will we look at the Northern market now? If you can highlight, are we looking to deepen our presence there? Because we have emphasized a lot on the Northern market, its profitability and ROC of almost 27%. So if you can just touch upon the Northern market, how will it shape up now?
Yes, I think we have continued to have strong ambitions for that market. I think, of course, we have a strong team in place there. We've actually appointed as Gaurav's successor an existing P&L leader in our NCR team who is number 2 to Gaurav. Geetika, who's been one of our star performers and been a key part of the reason NCR has performed so well. So she will now take over as the P&L head for the NCR zone when Gaurav moves over, and we continue to have very ambitious plans for the growth in that zone.
On the business development pipeline, so I mean, some of the peers do give a guidance on annual guidance on certain number on the business development. So, do we have any number especially for MMR, especially on the premium side, so where we don't have any significant presence as of now? So you've been highlighting in earlier calls that you're looking to significantly ramp up and increase our market share, but of late we've been seeing that other players from other geographies coming up and taking up market share, and we have been not really done a great job out there. So if you can just touch upon, if you can quantify some of that, especially on the premium realty side.
Yeah, I think in Mumbai, first of all, as I mentioned, we actually last quarter had our best ever sales probably in Mumbai, certainly since our big Vikhroli launches, where we've crossed 1,000 crore in sales. The project, the major contributor to that was actually a business development project we added last year in place to do that for large, significant opportunities. I think given the Godrej brand and our track record on doing probably more joint ventures than any other developer over the last 6 years, we feel very confident in being able to do new partnership projects as well. So I think you'll see a mix of those and also some redevelopment projects.
Okay, thank you, Pirojsha, and all the best to you.
Thank you.
Thank you. We have the next question from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hi, congratulations to Mohit on your move ahead. Wishing you all the best. My first question is on the growth trajectory. So you have talked about 10,000 crores of sales in the current year, but it's now only sort of implying flat numbers in the next 9 months. So why is that so? I mean, is it like a launch issue or you can do better?
So I think 10,000 crore obviously is a we think pretty healthy number. It would imply annual growth of 27%. Of course, the endeavor will be to always do even better. But I think that would be, we think, a pretty solid number for the year. So we want to first make sure we do get to that number. And obviously, if the opportunity presents itself, we will go for a much larger number. I think we've been quite happy with the steady scale up we've been seeing in the business from a booking value perspective. I think we're probably the only developer that's delivered consistent year-on-year growth each of the last 5 or 6 years. And we want to continue to build on that. So I think 10,000 crore this year, if we can do a bit better, nothing like it. But again, I think a 27% growth for the year will be a healthy number.
Sure. And on the cash flow part, you mentioned you're expecting it to be better, in the next 9 months. So where can we, roughly expect the net debt to end the year? We had an uptick of close to 500 crores this year. Is that a fair pace to assume, going forward?
Yeah, I think more than operating cash flow, which I think will be strongly positive for the year, I think the bigger determinant of where we end the year from a net debt perspective will be scale of business development. So the hope would be to actually, be investing even more than we have the last couple of quarters. But yes, I think at a minimum we would expect the sort of total net debt to go up by at least that if business development is firing the way we want to. But a few big deals could make that happen at a faster pace.
Pirojsha, the big deals that you talked about, say the 5,000 crores out of bracket, these are land purchases or these are JVJDs?
Again, there's a large number of opportunities we're looking at. I think we're looking at, for example, one large joint venture project and one large outright purchase. The specific project that I said could be about a 5,000 crore revenue opportunity is an outright purchase.
Okay. And see, one question from the P&L perspective. So on the current year, which are the project deliveries, if you can guide us for that we can expect in the next 3 odd quarters?
I think we have a large number of project deliveries. We expect over 10 million square feet of deliveries this year. So it'll be a long list of projects. Maybe Rajendra can take you through that offline.
Sure. I will connect for that. Yeah. Thanks and all the best. Yeah.
Thank you.
Thank you. We have the next question from the line of Girish Chaudhary from Spark Capital. Please go ahead.
Hi. Thank you. Firstly, on the Bangalore
Mr. Chaudhary, I'm sorry to interrupt. Please could you use the handset? The audio is not clear.
Yes. Yeah, is this better now?
Sure, thank you. Please go ahead.
Yeah. Firstly, on the Bangalore market, so if you look at the sales, they have been pretty soft over the last year or two. This quarter also, the bookings were around 270 odd crores. So when do you expect a rebound in performance from this market? If you can give some concrete launches planned or BD in this market. That's the first question.
Yeah, I think we expect a fairly immediate rebound. We've also made some changes to the team there. We've got a new CEO there who's been on board for a couple of months, who I think has very aggressive plans for growth in the market. We're looking at some exciting large new opportunities, but we do have a few significant new projects that we'll be launching from deals we added last year. So I certainly think that we've taken cognizance of the low sales in Bangalore over the past 12 months and should report a much higher number over this next remainder of the financial year. Mohit, you want to add anything?
Yeah, concur with your view. I think there's a very interesting pipeline we're building in Bangalore on BD side. So once that comes in, we'll see a big turnaround in Bangalore market.
So if I have to ask you this other way around, of the 10,000 crores guidance, how much can one expect from this market if you have any number in your mind?
I think this year the contribution from Bangalore will be relatively less, but I think next year onwards it should significantly increase in contribution once these BD deals get signed.
Okay. And secondly, last 2 years, again, deliveries were around 6.5 million square feet, so around 6.4, 6.5 million square feet. So any target if you can share for FY23 and 24 in terms of completion?
As I mentioned, sorry, for this year or for next year are you asking?
23 and 24, if you can share for both.
Yeah, I think this year we'll see a large uptick, certainly north of 10 million. I think a lot of it will depend on the exact timings of OCs, but I think 10 million would be a base case number. And you should see a strong number the following year as well. We're currently selling over the last couple of years about 11 million square feet a year, so within a couple of years that should in any case be the minimum rate. But as we scale up, obviously deliveries will keep pace. But I think over the next couple of years, you'll see at least 25 million square feet of deliveries.
Okay, got it. Thank you, and all the very best.
Thank you.
Thank you. We have the next question from the line of Nimish Maheshwari from RSPN Ventures. Please go ahead.
Congratulations on good set of numbers. How do you expect the demand of with respect to increase in interest rate scenario? Like across the year, 1 to 1.5% may increase. So how do you see the demand?
Honestly, I don't anticipate any major impact on demand. I think it's important to remember that the starting point for this increase was the lowest interest rates India has ever seen. So even today a mortgage costs 7%. If that say goes to 8 or 8.5%, that would be relatively low by any historical standards. The last time the sector was booming in 2011-12, interest rates were 10-11%. So I'm not overly concerned with this. Obviously, we'll have to keep a close eye and watch how things move. But my sense is affordability for real estate, while not quite as good as maybe a year or a year and a half ago, is still one of the best it's ever been, because prices are still quite moderate if you consider that we went through an 8-9 year down cycle with very limited property price appreciation. So the 10% or so it may have seen appreciation over the last 12-18 months is a relatively modest number in light of sort of the time correction and the kind of increases people have seen in their incomes over this 10-year period. Similarly, as I mentioned on interest rates, there is some increase over the recent past, but we're starting off from an extremely low base. So my sense is the Indian economy and positivity around its performance is been in a long time. I think if that holds, and if people's view is that inflation is likely to make property more expensive, which I think is correct, then you will have home buyers wanting to come into the market. I think sometimes the industry is as much about buyers' perception as it is about the underlying numbers. So my expectation is that we're still in the relatively early stage of what will be a lasting upcycle in the sector.
Okay, thanks.
Thank you. We have the next question from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. My first question is on the ROCs of different regions. Like you have explained that over the last 4-5 years, NCR we have been able to get 27% kind of ROC. If you can talk similar number for the other regions, MMR, Pune and Bangalore.
No, do you want to take that?
Yeah, I don't have the number offhand, but maybe we can touch after the call and provide you this data.
Rough range you have, sir?
Honestly, I don't have this number of, but we can share it after the call. Rajendra, if you can just share it after the call.
Sure, Mohit.
Yeah, sure. Second question is on the 10,000 crore booking target we have. If you can give rough split in terms of regions which you think we can achieve.
Yeah, I think, as Mohit was saying, Bangalore might be, of the four regions, contribute the lowest amount to this year. I think NCR and Mumbai and what we call our east-west zone, which is mostly Pune, but also Kolkata and Ahmedabad, will all contribute relatively large numbers. I think the exact split will depend on, which exact projects end up getting launched and how they perform. But I think overall, we think 10,000 crore will require a strong performance from all our zones, and I think we'll see good growth over last year in all four zones.
Sure, sir. And on the Pune and Bangalore market, so we have a very ambitious target for this year. Although Q1 there weren't any big launches, but Q2, are there any big launches, or most of them are meant for the H2 only?
Mohit, you want to take that?
We have a big launch coming up in Pune in Q2, which is at the last stage of approval. So that would be a very big launch. And apart from that, the launch pipeline looks healthy. There is good launches in NCR, which is planned. Bangalore also, we have a big launch already underway. So we are, I think, we are looking at a strong number for Q2 also.
Sure, sir. Final question is on this, the cash we had raised. We have talked about trying to deploy most of it this year itself. So is there a chance some of it can happen in Q2 also, or it will be again back-ended in, say, Q3 or Q4 only? The deal finalization.
Yeah, I think we should have deals getting added every quarter, so certainly some of them should be in Q2 as well.
No, I'm talking about the big ones because we have spent 300 crore for one of the projects, but compared to the cash
yes, I think some are at a stage where hopefully they can be announced in Q2, but obviously the reason they've not yet been announced is that they're not ready. So I think these things are not always completely predictable from a timing perspective. But yes, we'd hope on the next call to have some significant updates in place.
Sure, sir. That is it from my side. Thank you.
Thank you.
Thank you. We have the next question from the line of Kunal Lakhan from CLSA. Please go ahead.
Yeah, hi. Thanks for the follow-up. So again, just dwelling on the Bangalore contributions. Actually, last year also we didn't have much contributing from Bangalore, and we also saw some cancellations in Q3. Just wanted to understand, like, how are we approaching this market? Because we've been in the market for some time now. Any change in the strategy, besides what we've been doing so far?
Yeah, I think we're very clear on what our expectations in Bangalore are, and that over the last 12 months we've missed them. I think in some years we've been in the top 3 players by booking value in Bangalore. So I don't think that we've not achieved any scale there. It's not, and also it's not an issue that any of the projects we've launched haven't done well. So I think it's a pure question of needing to secure more business development, which we've already made some progress on over the past 12 months. And have some very interesting opportunities that we hope to lock in over the next few months. I also mentioned we've made a recent change in our leadership in Bangalore, and the clear mandate to the team is to make sure the scale moves up very considerably. So we have no concerns on the fact that will happen. We agree, we haven't done as well as we could have from a scale perspective in Bangalore over the last 18 months, and we're fully committed to ensuring that's rectified and very confident that it will be.
Sure. And just a data point that I must have missed in the past. The cancellations that we had seen in Q3 of 100-odd crores in Bangalore, this was for which project?
This was a project, Godrej Reflections, which had an issue with this NGT order, which we're in the process of appealing in the Supreme Court. So for any customers who had wanted to withdraw from the project, given the uncertainty, we'd provided refunds there.
Sure. Thanks so much, and all the best.
Thank you.
Thank you. We have the next question from the line of Dhruv Jain and Himanshu Zaveri. Please go ahead.
Yeah, hi. I just wanted to ask the question on the Vikhroli front. Is there anything happening over there? Because it's been a long time since approvals problem or some other problem?
Yeah, no, as we've mentioned in the past, I think we'll now announce it as and when something is ready to launch here. There are a couple of parcels that are being worked on, but there is continued regulatory uncertainty. Of course, a large part of the land is still used for other purposes, but the couple of pieces of land that we hope to launch soon, we'll certainly announce as soon as we're confident that it can be launched very quickly.
So the same one which you have mentioned in the
yes
the deal, right?
Correct.
Yeah. And any of the Ashok Vihar one you said you're launching in the third quarter, right?
Yes, again, obviously subject to all approvals being in place by then, but that's our current best estimate of the timing. I think the good news in Ashok Vihar is the NCR market has been really doing very well, both from a volume and pricing perspective. So while obviously we are frustrated with the delay and eagerly looking forward to kicking off that project, from a pure financial returns perspective, I think the project only looks better now than it did a year or two ago.
So whenever we get the approvals and all, you're pretty confident of the project doing very well because of the NCR market, right?
Yes, absolutely. I think one is the NCR market. Two, I think this is a very unique land parcel and quality of location. The kind of scale of the land gives us an opportunity to create a very high quality product. So yes, I think this is certainly a big priority, and extremely confident that when it kicks off, we'll get off with a bang there.
Okay, and the Hinjewadi one we are launching this quarter. Is there any chance?
No.
That's correct. That's the project which we mentioned is what we are looking to launch in this quarter.
And the Okhla one also, right?
Yes.
Okay, thank you.
Thank you.
Thank you. We have the next question from the line of Manish Gandhi from KPMK Investments. Please go ahead.
Yeah, hi. Congratulations on a great start, and especially surprised by the numbers of Thane. So my first question will be in NCR after Ashok Vihar, we don't have any greenfield project, and we have done exceedingly well. But given the current land price situation in NCR, so how do you look for the next 2-3 years? How do you build a land bank or deals? So first question is on that.
Yeah, so Manish, our practice has never been to try to create large land banks, but to continue to do ongoing business development. In NCR, we have some plotted projects, we have some remaining phases of existing projects. Ashok Vihar itself is like a 8,000 crore plus booking value opportunity. So, and of course, it is one of the focus markets for new capital deployment as well. So I think that combination, we've, of course, looking at this for the next couple of years, we're very confident of delivering strong growth in NCR on a significant base. But obviously for sustained long-term growth, I think we have to continue to fire from the BD side as well.
Yeah, no, it's a wrong choice of word. It's not a land bank, but I was just saying on the BD because our aspiration to grow high and given the current...
No, it's a fair point, and it's certainly one of the markets where we're looking at some very interesting opportunities. We've seen, almost anything we have launched there, including recently a project in Sector 43 in Noida, which became our best-selling ever project in terms of a 12-month sale. So I think we are looking to add similar high-impact projects.
And do you see opportunities, Pirojsha, or it is very difficult to do BD right now in NCR?
No, we are seeing opportunities. I think, there'll always, of course, be some level of competition. I would say the opportunities actually remain considerable, though, while a lot of news goes on the, 5 or 6 of us developers who are active in the market and are closing deals. I think there's still a long tail in the sector of liquidity issues and other problems. So we see, decent opportunities to add significantly to the portfolio, and are looking at some interesting things in NCR as well.
Yeah, that's wonderful. And the last small one, any updates on Taloja? It's a big project, 7.5 million, but so are we seeing to getting approvals for next year or something like that?
Mohit?
Yeah, there is some, there's a critical CP which is pending in Taloja, which is, the road access, which we are working on with JVP. So unless that is done, we don't want to launch the project because that is the critical thing from a sales and marketing perspective.
Right. But do you expect to solve that problem in next year or just?
Yeah, I think the work is on, but acquiring land is not easy. So difficult to give a guidance, Manish. Thank you on this one.
No worries. And Mohit, all the best for your journey, and thank you so much. You have added a great value to the Godrej Properties, and we would miss you definitely. And all the best.
Thank you, Manish.
Thank you. We have the next question from the line of Ankit Patel from L&T Mutual Fund. Please go ahead.
Yeah, good evening to everyone, and thank you for taking my question. My question is around the debt, the borrowing piece for the company right now. What we can see is around 5,000 crore of gross debt and around 4,500 odd crore of cash. Could you throw some light in terms of how the borrowing program, as you scale up now in terms of more fund deployment, say 500 crores of run rate every quarter, how do you plan to, space out the borrowings between different instruments, and how do you look at the borrowing side? Yeah.
Rajendra?
Yeah, sure. So the borrowing, we have borrowing across, various instruments like NCD, CP, commercial papers, bank borrowings, So these are the, borrowing instruments and borrowing program we keep running. So just to give you a perspective, one thing is that, ICRA has recently upgraded our borrowing program from AA long term to AA plus, so that is on our borrowing part. So we think that the borrowing should be in the ballpark in this range only, unless, there is some, good BD opportunity. Like now we are having, QIP money to be deployed. So post that deployment, we may see a little bit uptake on the borrowing. Otherwise, for a normal working capital, we don't require because the projects are self-funded. So the borrowing should stay in this ballpark, other than any BD requirement.
Okay. And in terms of your outlook, in terms of the pricing, so your funding cost gone up by about 10 bips.
So it has to be because I think the repo rate has gone up by 90 bips, and obviously the interest rates are on rise. So you will also see a slight uptake on our borrowing cost, but obviously it will not be in linear to the repo rate. But yes, there will be impact on the borrowing costs in the coming quarters.
Okay. In terms of the repricing that would have happened, what kind of impact would already have come in, and what do you expect is still?
The impact is already there. We were at 5.95, and now for the quarter we were at 6.04. So that impact of 9 bits has already been there. Obviously, going forward, there will be some impact. Obviously, the CP markets and the bank borrowings, as the bank increases their rate, you will see those impact. But how much is that impact will be known in the coming days, because there are certain instruments which we have logged in for some more time, for a longer period. So that impact would not be immediate, but yes, so gradually over the period of time there will be some impact. But I would be saying that like always we would be the best in the market.
Okay, thank you. Those are my questions.
Thank you.
Thank you.
We have the next question from the line of Manish Jain from Gormal One LLP. Please go ahead.
Yeah, hi. I wanted to know about the Pune market, given that in the current quarter, despite any new launches, we have done sustained sales of more than 300 crores. And I see that 7 new phases planned for the current year. What is our plan for BD in Pune, given the kind of dominance we have acquired in such a short period of time?
Yeah, we've got again, some interesting. We've partnered with as you know we did 6 projects in partnership with Solitaire in Pune. We've built a solid partnership. We're looking at possibly scaling up that partnership. We have a deal in Pune also at a relatively advanced stage that we're hopeful of announcing this quarter. So I think clearly we have scaled up well in Pune. I think it's been a strong journey there over the last few years, and we want to build on that momentum. So across all 4 of these zones, I think business development is a significant focus. We have the appetite, we have the capital. I think there are interesting opportunities. So we hope to have good announcements across all of these 4 zones.
Perfect. Thanks. I'll join back the queue.
Thank you.
Thank you. We have the next question from the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
Thank you for taking up my question, and congrats for good set of numbers. First of all, best wishes to Mohit for his future endeavors. My question is pertaining to FY23 launches. If you look at our target launch, almost 34% of launches are expected in Bangalore. However, we don't see Bangalore contributing much this year. So are we seeing some major spillover in terms of launches to next year, especially in Bangalore market?
Well, again, I think the relative scale of each of these projects would also have to be looked at. But we do expect Bangalore to show very strong growth over last year. So it's not that we're not expecting good numbers from Bangalore, but if you divide this 10,000 crore into sort of 4 parts, we think zones like NCR and Mumbai are likely to do more than 2,500 crore, and Bangalore probably would do a little bit less than that. But we certainly do expect a solid performance in Bangalore this year.